Hello guys, I have one of my students, they asked me to make a video about these political news that are overwhelming the political arena. And for me, I'm not going to speak about politics because it's not my expertise, and second, I have nothing to do with politics. Okay? But each one I know has an opinion about anything. Now, this political news, sometimes it affects the market directly. Okay? And it's very quick. So people mostly are day traders who are short sellers. Mostly they like this news, okay? Because when the day is going down, almost all the you see almost all the market is going down. But I'm telling you, it's not all the market, it's most of the markets, because it is these guys who are traders at the beginning of the day, they hear news and they see that the market is beginning to go down, so they jump and they begin to short stocks. Okay, that's why you find almost all stocks, they go down when there is like a national event news or international news. Okay, but it doesn't affect every stock, it doesn't affect every industry. Okay, the thing I will show you, I have made videos last year for you guys who remember my videos about the pre-exit news when Great Britain had left European Union. Okay, so on that Monday all the major indexes fall down or fell down. I think on Friday Dow Jones fell 700 points. Okay, it is a day where people, mostly day traders, they short. Okay, they short sell stocks, whatever stocks they have, whatever stocks they know, they see in the chart, they begin to go down, so they go, because this action, it's not only takes few minutes, it takes maybe the whole day. Okay, but mostly the action is in the morning, and it is known. So day traders, they know this kind of because they are always awake at 7 or 8 o'clock. They go to check before the market opens, they check what's going on to futures and so on, and they know the feeling about the market in the morning. Now when the market opens, it's easy, everything is going down, so some people, they jump and they short sell stocks. Okay, but last year I showed you guys, for those who watch my videos, that utilities stocks, I can remember, they were going up. Okay, it's one of the industries or the sectors that were going up. It means a lot of maybe day traders, they don't short them because there is someone who is big is buying. It could be mutual funds or some. That's why you see that those are going up, and they show in the chart how things work. Okay, now on next Monday, this happened in August last year, I think 24 August is Friday, and this is where the news happened. 24, so 25, 26, 27, on Monday we have another fell down, so the whole market is falling down again. It continues. But on Tuesday, which is the 28th of August 2016, the market has go up, and almost the short sellers, they buy back shares. So there is a big candlestick which is green, and at that time I told you guys that it is the day to buy, because the following days, if it continues to go up, that's it. Okay, it's just there is what we call a reversal, a strong reversal. And before, there is a big trend in all measure of indexes like Dow Jones and SP 500 and Russell 2000. All they have been into a big trend. So this news, it comes like a correction to the market, and this is why we say correction. But it is not a sell-off. That's the thing I'm always try to make sure you understand. Understand that a sell-off, it means that the mutual fund will be selling for a long time, and we have what we call a downtrend. Okay? A downtrend. Let's say as it happened, for example, to Twitter. Twitter was $74, and then the mutual funds began to sell off. That's why I have made a lot of videos warning you to be cautious when you buy Twitter at that time. And I have made a lot of videos. If you want to, you can just go to check my channel and begin from the days I begin to speak bad about Twitter, because it's always having new lows and new lows and new lows, and it becomes very bad to trade, not just to trade, to invest in it for a long time or something like that. Okay, so news sometimes come at any moment. So if you are doing swing trading like I do, what is the thing that I always teach you is put a stop loss. Okay? Sometimes you are working, sometimes you are in the mountain, maybe hiking, and you don't know what's going on in the market, and you are very happy hiking and making or barbecue, and you are having fun. Okay? If you put stop loss, at least if things go wrong, you exit the trade, and your money is safe in your broker. Okay? There is one student just a few days ago. He made a trade, and he knows that the earnings are coming. He has a gap down, so he lost money, and then he sent me an email. He told me, what do you think? What should I do? Okay? So I understand the game. I told him, you did not put stop loss, because if you did put stop loss, you are not asking me now what to do, because you just exit. Okay? There is no need to stay more. To stay more for what? You have a big loss, so why you are staying more? And what if the stock is still going down for many days? You will have a more bigger loss. That's why either you accept the rules and instructions and you follow what I say, or you just get what you get, because the market, I'm telling you, is merciless for the ignorant traders. Okay, if you are ignorant, you don't apply the basics of trading, you will be losing more and more money. Okay, And this news, for example, we have now politicians talk about North Korea and Venezuela. Okay, so it might in the weekend or in the morning or the afternoon or during the day having bad news, maybe a war. Okay, maybe a war between America and Venezuela or North Korea. Whatever happens, even if it is just rumors, not a news. Okay, just you. There are some people or hedge funds who take action and they short the market. Okay, these guys, they are not small. Understand that when you see, for example, a pre-exit event last year, the Dow Jones fell down 700, mostly 700 points in a day. So 700 points in the Dow, it is not someone who is a small who is doing this. Okay, it should be bigger hedge funds, and it should be maybe some mutual funds who take this opportunity just to sell what they want to sell. Okay, so try always to protect yourself. There is no other way than to do a stop loss. Okay, if you don't believe, and even if you do many trades without stop loss, or you are safe one time, two times, and the stock goes up, but one day you should understand this, but the hard way. Okay, when you want to lose only $100 or $200 or $300, you end up losing $1,000 or $2,000 from your money, whatever percentage is, and you don't want that. Okay, so there are techniques, there are ways to minimize the risk and maximize the profits. This you can see, for example, in training level 8. Okay, if you have it, it's okay. If you don't have it, it's good. A good time to check it. Now, there is another thing that I want to speak about when there are news, or sometimes for those who are looking for long trends, try to see indexes and sectors that they are going down. Okay, now there are techniques in order to know if they are going down or going up. Okay, and then there is a way to short these indexes and sectors without shorting for real. It means you are not going to short sell stocks. Okay, so you are just using some kind of stocks, and with this kind of stocks you can short the market without using margin account. Okay, so this is not typically selling short like I teach, for example, in training level 11. Okay, this is just a global thing, something just with indexes, with sectors. It applies on those. Okay, if you are interested, you can go and check training level 18, how to short the whole market. Okay, you find the training either in ebooks or in videos, and it's high time just to take a look at it. At least you will be prepared. If you see, for example, some indexes or some sectors that are going down, maybe you know them, maybe it is your profession or your job, and you know that the sector is going down and it's not going good. You can check the indexes, and then you can short these indexes and sectors. Okay, so this is a good training for those who are following bigger things. They are not following for example, stocks by themselves, because for me, I don't short sell stocks for the long run. I don't. Okay, So if I want to, I will use to short the indexes is better, because when they go down slowly. Okay, if they want to move up, there should be a big buyer to push them up. So it's very good. And a lot of people, they come when you see, trading is that some people come at first, let's say they short sell. Okay, they short the index. For example, some people short the index at the beginning when they see it. But understand that other people, they come and they short. The other people, they come 1 week, 2 weeks, 1 month, 2 months, 6 months, 1 year, 2 years, and it's going down. Have you seen, for example, the energy sector? It has been going down before for almost 1 year and a half. So it's not only for 1 day or 1 week or 2 weeks and that's it. This is not a selling off. This is a small correction. So selling off, the result of selling off is you see something going down and down and down and down. Okay, here I'm speaking about indexes. I'm speaking about indexes of industries and sectors. Okay, so at least you have an idea how things work. I have explained before what we call industry rotation. It's a very simple concept that I explained many times. Hope you guys, you take advantage of what I am saying, because if you just discover one index, it could be industry, it could be a sector that's going down, okay, or it's going up, it's the same thing. You just buy the index and you follow. Okay, it's just a trade, but it takes longer. It could be taking 1 month, 2 months, 6 months, 1 year, 2 years. It is a long trade, because if something is going down, it should be going down for a long time. Okay, it's not only 1 week or 2 or 3. So this is how the people, they make money for the long run, but it is a trade. It is not an investing. You don't invest because it is just an index. Okay, and since I have explained industry rotation, I will just give you a look again in order to understand it very well. Mutual funds, they buy some industries and they sell some. Okay, so your job is to find which industries are going up, which industries are going down, and then just you buy the index. Okay, and this is what I teach in training level 18, which is how to short the whole market. You can go long also, which is the same technique, but I use what we say how to short the whole market, because when the market is going down, let's say we are going to a bear market, for example, this will show in almost all indexes they are going down. It will not be 1 day or 2. Okay, this is just a small correction, well, because of the news or because of something like that. But when it is a bear thing, everything stops going up and everything going down. So it is the opportunity to think about it. The market, there is no something that's going up and everything is going up. It doesn't happen in the market. That's why people, they are always confused. They don't know. Someone is always telling me, sending me an email, they say, oh, the market is good today. I say, which market are you speaking about? For me, I'm checking stocks. You can check indexes also, which is good. But it is not the whole market that you should see. You should see stocks, you should see indexes, but not the whole thing. Except when you buy the index. Let's say you buy Dow Jones, okay, index. So when you buy it, it means you are having the average of 30 stocks. That's it. Now, if you buy S&P 500, you are buying 500 stocks and getting the average. If you are buying, for example, Russell 2000, you are buying 2000 small companies average. Okay? Now, it's high time to know many things in trading, not just stocks. You can also short indexes, you can go long with indexes, okay? You can even put little money, and if it's going your way and you begin to make money, let's say an industry is going down and you see it and you short it, for example, you short that index, okay? You see 1 week or two, if it's going down also, it continues, you will be making money. That's it. And you will stay until you see that this doesn't go down and it will be going up so good. So you just exit at any time, making a profit. Okay? So this is how we trade, and this is the thing that you should always consider when you are doing trading. Forget about there is crash in the market and there are news and so on, because you can't know when this happened. Okay? So always protect yourself with a stop loss. At least you protect yourself. If things happen in the day, or when you are not watching your stocks, or when you are in a vacation, you have the possibility to exit. All your money is in your broker account and you are out of trouble. Okay? Don't play the investor and you are trading. If you are investing for the long run, it is another thing. Investing for the long run, you don't need to put stop loss, because you are looking for many years and to see if your bet on this company is good or bad. Because it doesn't mean that you stay 5 years or 10 years of a company that you are making money. It's not true. It's the direction of the stock. Are you making money? Yes or no? It's not the time. Time is a factor, but it is not that important. What is important is, are you investing or are you trading? You should make a big difference. Okay? Don't mix the trading with investing, because you will have problems. Okay? So this is about, in general, about this kind of news. It could happen at any time. It could be earning news. It could be national news. It could be international news. It could be anything news. Okay? That's why for me, I don't trade the news. Which means I'm not following news and watching day and night what's happening in the market and then I take actions. No, I'm trading using my techniques of finding stocks. I follow them, they go up, I make money, that's it. If I want to short some indexes, I check some indexes and you tell me how. Okay, go to my training, level 18, how to short the whole market. You study it and then you have a clear idea, and then you can go to the chart that I am using. You find all the like indexes, you find all the industries indexes, and you watch them and you see which is going up and which is going down, and you do a plan, and then you short the index or you buy long the index. It depends on you. Okay? So thank you very much for watching. If you have any question about what we talked, I talked about many subjects today and maybe it's long, but you know, things are interrelated and I want to make sure you understand things before you do stupid things. Okay? Because when you do stupid things and you ask me you ask me my help, it's done. You know, you should ask before, not after you did something. And you know, in general, if you get to know my strategies or my training, you will be better equipped with what to do at any time. Thank you very much, and see you next video.